Hey, what's up, ladies and gentlemen? I hope that it's obvious that today I'll be talking about XDTE and dividend analysis paralysis. If you don't know what XDTE is, it is an ETF that pays weekly dividends. There's more to explaining that, and I'll get into it just a little bit, but I'll give you some resources where you can learn exactly all the ins and outs of XDTE. At the moment, let's discuss what is dividend analysis paralysis. More than likely, if you're watching this video, you already know what a dividend is. It is a bit of money that you get paid for owning generally a a company like a stock, owning a share of a company through a stock. With XDTE, you get paid weekly dividends, even though it's not a company. It's an income producing asset. So dividends, obviously nowadays, dividends can come not only from owning shares of a company, but also through different type of assets. So let's look at what is analysis paralysis. Doing a quick internet search, analysis paralysis, the state of over analyzing which leads to decision delay or worse outcome. That's a good one sentence, I think, description, in my opinion. It's pretty good. They break it down more. Analysis paralysis describes an individual or group process where over analyzing or overthinking a situation can cause forward motion or decision making to become quote unquote paralyzed, meaning that no solution or course of action is decided upon within a natural time frame. A solution may be deemed too complicated and a decision is never made or made much too late due to anxiety that a potential larger something. So basically, you're not making a decision because you are thinking and you're analyzing, you're not coming up with a decision. So now that we have that, I want to go back to this whole idea of XDTE as our case study, but the idea of dividend analysis paralysis. And I was stuck in this for a long time, which is really the reason why I'm making this video. Is for I don't know how long, but I will say a long time. Defined what's a long time is subjective, so everyone gets to define that differently. For some people, and I guess it's not only the person, but maybe it's also the activity. Chael Sonnen, that MMA guy, tells this story about is 1 second a long time? Well, heat up a stove until it's red hot and put your face on it and tell me 1 second's not a long time. But at the same time, if you take that 1 second and you are, I guess, doing something like looking into the eyes of the love of your life, that 1 second probably goes pretty fast. So a bit of subjective of on a person's opinion and what the activity is, but in my opinion, for a long time I was in this dividend analysis paralysis. There were certain stocks that I didn't buy because I just wasn't sure, because I'm not sure, because all this analysis paralysis, not taking action, frozen in place with no action being taken. In this case, my dividend income not growing, barely even getting started because, well, could I get a better price on the stock? What if what if this payout ratio is too high? What if this? What if that? What's the tax implications? What if this? What if that? What if I buy that and then now I have less buying power? And what if this? What if that? And then sometime like 2023, 2024, I don't know when it was exactly. It was sometime in that time frame. But I went to this. There was two things that lined up for me. One was I got this John McGregor course that's helps with kind of like reprogramming or whatever term you want to use. It helps dealing with a person's unconscious mind and aspects of the unconscious mind to help come into like a better having a better unconscious mind. Having your mind be better unconsciously when it comes to dealing with money. So I was going through this course, and at the same time I went to this relationships course in California. So I flew from Hawaii to go to California to do that. And even though I technically wasn't in a relationship, but I went by myself, and almost everybody else there was married, and it was a couples thing. The reality is that I myself and you yourself have a relationship with yourself. So for some reason, these two things together, stud doing this John McGregor um, home study course on reprogramming the unconscious mind to be in a better harmony of achieving financial results that one wants, and going through this course, relationships course, on the plane back from California to Hawaii, it I'm going through more of the McGregor stuff, and then I don't remember exactly when it was. Maybe it was on the plane back, maybe it was after I got back to my apartment. I can't quite remember, but I just all these epiphanies were coming to me that for years I've been giving these little bit of dividend income. And around this time I had TD Ameritrade had just recently sold Thinkorswim, and I don't know what else, all the details of this transaction. But Thinkorswim was no longer owned by TD Ameritrade. It was owned by Charles Schwab, and Schwab changed the margin requirements on crude oil futures, maybe all the futures. But before this happened, I was heavily selling options on crude oil futures and trading crude oil futures, and everything was going very well, and it like fit into this amount of margin that I had the amount of margin that I developed a strategy of trading futures and options on crude oil futures that fit into my margin. And then that was taken away from me when Schwab bought out Thinkorswim, and so now I was looking at how am I going to redo things, because when I say it was taken away from me, the amount of margin required now to do the same thing was, I don't know how much more, but it was significantly more, and so I couldn't do the same strategies that I was doing, that which were working well. But however, that's how the game of trading goes, is things change, and I myself want to change and update with the times. So then these two courses put together, I just really realized that all that effort that I had spent looking at and doing all this different things needed in order to make X amount of money per week or per month on crude oil futures, it took a lot of effort, but the dividends, they just kept rolling in, and it took no effort. And then this something just dawned on me, and that ultimately, like, I was in analysis paralysis. It just dawned on me. I was like, you know what? I'm building positions, or I have small positions built in some of these particular stocks. And now every month I'm getting paid. Every single month, without without missing a month. For like 2 or 3 years I've been getting paid every month. And it takes no effort. No effort. And here I've been jumping through hoops. Now, granted, I made a heck of a lot more money monthly trading crude oil futures and the options on them than I was making with um, just on dividend portfolio. However, the amount of effort, when that effort was kind of calculated into it, there kind of wasn't a comparison, because on the dividend side, and even though I was scared of this and scared of that, and worried about this and worried about that and unsure about this and unsure about that in this big analysis paralysis. The reality was I had already had established some smaller positions in these particular stocks, and they're paying me. They're paying me in spite of this. They're paying me, but I wasn't fully like I wasn't really building these positions up. So I come back from this relationships class, seminar, whatever, weekend event, whatever you pick the appropriate term that you want to put on that, because that the the name you want to put on it, it doesn't matter. The result when I came back, a light bulb just went off in my head, and I was like, you know what? There was a certain position that I had already been building, and because I have to reorganize my whole approach to trading due to the margin requirements changing on the crude oil futures, I'm gonna really I'm gonna build out this particular position really big, and I was just gonna just give a finger to the old analysis paralysis, and come what may, come what may. And it has been a really, really fantastic decision to do that. So just be careful if you are somewhat like me and you're getting caught in analysis paralysis of what about this stock? What about that stock? What about the tax implications? What about all these different things? In a way, like if you're not making money, the tax implications are zero. The tax implications are irrelevant if you're not making any money. And I don't know if this is true, but to some degree, the way that I started looking at it is I'll figure out what the tax consequences are during tax time. And because I'm creating a lifelong venture for myself, every 12 months I'm going to pay taxes again. Like it's not like I got one time to get my tax situation right, and if I don't get it right, then I'm done. No, like how I will keep growing and adapting and modifying and doing whatever I need to do to ebb and flow with the tax situation and do things differently. So I started doing that. I started building out this. I started taking some massive action on my dividend portfolio, which I built out this particular position basically in SVol. If you're familiar with SVol, I built it up to a pretty sizable compared to my monthly expenses. So the dividend income that I was getting and still getting from SVol was paying a significant amount of my monthly expenses. So then from there, I decided I'm going to start expanding into some other things. And around that time, I guess I somehow stumbled upon like these higher yielding ETFs. SVol and XDTE are came about because maybe a couple years ago, it definitely was at least a couple years ago, there was some change in maybe SEC Securities and Exchange regulations or laws. I can't remember off the top of my head. If I did some research, I could figure it out. But there was some change where now you could create ETFs not just based on a basket of stocks, but actually on, uh, for lack of a more fancy or a more accurate way to say it, basically on derivative strategies, so different option trading strategies. And that is exactly what XDTE is. So XDTE, in case you don't know, is the zero DTE covered call strategy ETF that's put together by Roundhill. And I started also, as I mentioned, I started building a position in this. It pays weekly, and again, there are so there are so many different ETFs out there that are paying high dividends. For example, just here at Roundhill, what do they say their top hold? Oh, that is for their ETFs, income ETFs. Look at this, just in weekly ETFs, they've got how many is this? 9, 10 just there. Income ETFs, they've got 2, 4, 6, 7 right there. And then this is just one company. Then you have like Yield Max, and then you have who else? Neos, and this company and that company. I mean, you can really get some analysis paralysis as you start going down this rabbit hole of which one's the best, and what about this, and what about total return, and what's it look like on a what's it look like on a stock chart? All these different type of things. What's my capital gains going to be? Well, you are going to do whatever you do, but I'll tell you what I'm interested in is what I'm interested in pertaining to these ETFs is cash flow. So a quick look here. This is right. It's a weekly distribution. So here's the last 4 weeks. A little bit over 25 cents. A little bit under 25 cents. A little bit under 27 cents. A little bit over 22 cents. Several months ago, maybe it was over a year ago. I really don't remember how long, but I opened this up to show everything. And at that time, I went back and I did an average of all the different weekly payouts from the inception of this. And at that time, it was averaging like 21 cents a share. So that's what I use an average for still up until today. I just go for an average of 21 cents a share. But is it really the best fund for you? Obviously, I don't know you, so I don't know if it is or isn't. And is it the best fund for me? I don't really know if it's the best fund for me, but I'm definitely building a position out in it, building a position here, which is growing. And one reason why I'm continuing to do this is because XDTE, it's got some it's got some fairly decent option activity. Now you're not going to see the open interest and volume as compared to something like Intel or Tesla or tons of other stocks. Like there's not a lot of volume, there's not a lot of open interest, but there's an option chain here. Some of these high yielding ETFs don't even offer option chains. And several months ago, it might have been the end of last year. I can't remember, but I sold a when XDTE was trading up in this area. Let's see a high of 51. Let's look at a different chart. It's relatively so new that it's not even going back. This is a 5-year weekly chart. Let's just go back 1 year. So sometime in this area here, I sold a put option at $48, a $48 strike price. Because around that time, due to looking at a variety of indicators and a variety of things, one of which I remember was specifically the volume profile. I don't remember which. That's the daily. It might have been. It might have been like on the weekly. See how we have a big on this volume profile. You got all these transactions. So if you're not familiar with this, this is showing where there's been lots of transactions. For example, you don't see much here because there hasn't been that many transactions there. But what about all this coming out here? All the way out here. Lots of transactions. And 48 is a little bit under that. So I was thinking, to acquire 200 more shares of XDTE at 48 would be pretty good. And I actually got paid $570 per contract. So I brought in like a bit over $1,000. I took that $1,000 and I bought more shares of XDTE. And then, of course, it sold off. So interestingly enough, a person would assume which I would assume if you told me you sold a XDTE put option with a strike price of 48 bucks, I'd look at this chart and be like, well, you're going to get assigned. They might assign you early, they being whoever is on the other end of that trade. Maybe you're going to get assigned early, or if it stays below 48 in expiration, you're going to get assigned at 48. However, this was a leap option, and at the time when I sold it, the expiration was in September. So here we are, the 48. But look at this. This is what's really worked to my advantage is the bid ask spread is so wide that even though XDTE is trading below the strike price, I was able to close this contract out and I bought it back. So I sold it, as I mentioned, I sold each contract for 570 bucks, even with the stock being below the strike price. I was able to buy back these contracts and close the position for $5.60. Oh, it just makes me so happy that basically I got paid to take a loan. I got this whatever, 570 bucks times 2 minus whatever little bit of commissions and fees came out of that. So 570, let's just say I got about 1,040 bucks. I know it's a little less than that. 1,040 bucks, which I used to buy more shares of XDTE, which has been paying me dividends every week, which I have drip set up. So I'm automatically buying more. And then it's under the strike price of 48. And I was able to close that position, not even at a loss, at a $10 per contract profit. That's bonkers to me. But even though it's bonkers, it's the truth. So now I'm attempting to open up I can't remember the time frame, but I have an order in, I think at $43. I can't remember maybe it's the same September contract. 43 bucks at right around here. I think I have my order in at 255 right now. Isn't that a little bit bonkers? Now, just because the mid is at 237, like once I place this order, it it didn't fill, and the bid or the ask changed, and I'm just leaving it in limbo right now because one of those 570 dollar contracts with a 48 strike price that I got filled on, it didn't fill automatically either. And to close out my position, it didn't fill automatically. I just left it open, and somehow through the magic of market making and bid ask spreads and just the way options work, the stuff fills. And so I'm attempting to do it again. I'm going to keep building a position in XDTE. I don't think it matters. To me, it matters what size of a position I'm building, but I don't see how it's relevant to this YouTube channel. And if you feel like, you don't want to watch my YouTube videos because I'm not sharing that information, then so be it. And the reason why I'm not going to share it is that if it let's just take two different spectrums. Let's say if you are a trust fund person, you somehow inherited a bunch of money. So regardless of my level of skill, if you have more money than me, whatever I tell you on my position size or anything like that, it might not really seem that impressive because you just somehow have a lot more money than me. Or let's say you didn't inherit it. Let's say you sold a business and you're really good at whatever, plumbing. You put together a plumbing business, you sold it to a venture capital firm, and now you have all this money and you're going to trade with it. Well, then you might sort of look down on me if my account size isn't as big as yours, which ultimately to me doesn't really matter because when it comes to plumbing, I don't really know what I'm doing. But when it comes to trading, no plumber without a trading background is gonna perform better than me. So I don't really care whether you look down on me or not. But in attempts to try to do something good for society, humanity, and for you, if you sold a plumbing business and your ego is a bit bigger than your trading skill level which is probably not in proportion, right? If you're good at plumbing, you might suck at trading. So there's that. The other part is, what if somebody it has a small account and they're really impressed by people with big accounts. So what if my account's not big enough for them? So you got two different spectrums over here. You got these other people where, oh, you know what? I seen this guy on TikTok and he has a Lamborghini and he says he has this much. All that stuff really doesn't matter, because how much ever money and skill you have, that's where you're starting. How much ever money and skill I have, this is where I'm at now. I'm definitely not at a starting point. So it's really irrelevant how much money I have. What is relevant is, do the strategies, do the ticker symbols, do they work for you? What about the thought process of choosing these ticker symbols? No matter how much money you have, is is a thought process applicable to that particular situation? So XDTE, I'm going to keep building this position in it. Is it right for you? I think, depending, if you're like me, I don't really need to ask too many people. For example, I'm not calling my priest. I'm not calling my pastor. I'm not calling the National Guard. I'm not calling I'm not calling I'm not calling anybody. Maybe I will watch some YouTube videos on it and see what other people are saying, and maybe I will look at their website and read into it and get an idea. But what I definitely will do, doesn't mean you should do it, but what I will do is I will look at the option chain, because this one, oh, that's got options too. There's sooner or later. SP, sooner or later, I will find I'll find something that doesn't have an option chain, but I'm not going to spend a bunch of time looking for it. Okay, so now I'm at one strike. I'm just walking away from the plate. So that's one thing I'm going to be looking at. I'm going to be looking at that. And so do whatever you need to do to see if XDTE or SPYT, SPY, what's another one? SPYI. Got options over there too. Which one is this? Neos. Look at that. No, no bid on the the most at the money strike. But I do like XDTE. I get it. If you look at the chart, I get it, and it's it's not recovering in share price. But for me, I'm that's not what I'm looking for. I'm not buying this because I'm looking to sell it at a higher price later. Like, what I'm hoping is Roundhill keeps this ETF together at least until I die, because I want this weekly income. And once I build this position up enough that I'm having a minimum of a certain dollar amount hit my account every week, and I thoroughly understand, out of like $100 or $1,000 or $1 of XDTE weekly income, how much is going to be taxed. When I have these things worked out, I'll decide, how big do I want to get this position. So I'm going to start wrapping this up and going back to, be careful of getting stuck with analysis paralysis when it comes to dividend stocks. There's so many of them out there. It's very easy to get stuck with that, and learn how to learn how to get a general idea of analyzing a dividend stock. There's lots of different dividend stocks out there, right? There's like the ETF ones. There's the REITs. There's the, what are they? Business development companies. There's regular companies. There's companies that in the regular companies that have been raising their dividend every year for X amount of years, so it puts them in different categories. So there's all these different assets out there that are in the dividend stock world, and there's different kind of parameters. And as you move to like REITs to like to ETFs to a company like Johnson and Johnson, there's different metrics that will give you an idea of like the stability of that dividend income and all these different things. But this video obviously is not about that, but you can start researching that out on your own. And you can research that on your own, because I don't particularly like I look at that. I definitely look at it, but I'm not in the mood or in the mood for the last like 6 months or so to be trying to put together a nice organized video to be showing you that stuff. So figure that out. The main thing I want to leave you with is I'm building a position in XDTE. I don't know if it's right for you, but there are these weekly dividend producing stocks out. Take a look, see if they're of interest to you. And also, ultimately, will you be worse off if you're making an extra $100 a month or $1,000 a year or whatever it is? Will you be worse off? I'm not sure. Maybe you will be. I don't know your situation. But ask yourself that. If you're getting stuck with analysis paralysis, will you be worse off if you start playing the game for real, buying some of that asset and figuring things out? It might not be perfect, but is that, did you, when you were a baby and you were learning to walk, did you stop trying because you didn't know? You didn't. I know you didn't, because I was a baby, and this is just the thing with babies. When we're babies, we don't get stuck in analysis paralysis. We just go for it. We keep trying and we keep trying. So you won't be worse off. I don't think you'll be worse off. I don't know. I can't actually. I don't know. I've never met you before. I don't know. Maybe you will be worse off. Maybe you're the type of person that you really need like to talk to a lot of people, and you need a lot of counseling, you need a lot of pampering, and you just this thing. But most people, I'll speak for myself, because I can really only speak for myself. I wasn't worse off. Even though on 2024 I was a little bit shocked with how my tax situation ended up with all this dividend income, I'm not worse off. I'm smarter and I'm more capitalized. And when we're looking at wealth measured in time of how many months in a row can I not work and maintain my current standard of living, I'm wealthier, even though it's not perfect, even though I can improve it. So consider that if if you are feeling any sort of dividend analysis paralysis. And I hope it was helpful. I hope you folks have a fantastic time, whatever time it is for you. Aloha.